Hey traders, welcome to BaseView. Today's topic will be why most traders enter too early, the real reason they lose money on NQ and DS. Most trading YouTube teaches support and resistance, liquidity sweep as well. After reversal over here, they're waiting for inverse, then entry on a first break of structure and all of those stuff. Don't get me wrong, it's right. But the missing part is professional traders don't enter when they see the setup. They wait for the market to prove its intention. This is a huge gap because beginners know concepts but don't understand timing. Here we have a liquidity level. Most traders see this and immediately think price will burst here. They enter because they are predicting, but institutions don't predict. They wait for confirmation. Let's see this on the live charts right now. This is our examples. Example number 1, example number 2. In first example, we have a liquidity sweep and reversal. Second example, we have a sweep and continuation. But how do we know when and how should we enter? Where should we enter? This takes us to second part. What institutions wait for? When price reaches liquidity, three things can happen. Scenario number 1. Liquidity sweep, nothing, absolutely no reaction, and just pure continuation. This is our perfect example. As we see over here, this is 15 minutes ES chart. So we have a liquidity sweep and pure, like there is no reaction, just pure continuation distribution. So there is nothing like to hold on. Scenario number 2, over here again on this example, we have a liquidity sweep. We should have retest over here and displacement in one of the directions. Let's say bearish displacement, which shows sellers entered market and they're dominating right now. Then retest of this level and pure continuation. And this is a place where professionals become interested. Market shows aggression. It tells us that sellers are actually present. So this is our example. Let's sweep over here as we see. Sweep. Let's get into 5-minute time frame of ES. As you see, swept. Then we saw this big bearish candle. So institutions here got interested. They waited until trend became healthy, and that's where they enter. That's how institutions think. And scenario number 3. Market sweeps liquidity and then starts consolidation. This is where many traders get trapped because they think nothing is happening. But consolidation after liquidity can be accumulation. Let's see this on live charts. This is perfect example. Where is liquidity? Over here, as we see. Where is sweep? Over here. It swept liquidity. What do we see? Consolidation. That's price starts consolidation. That's where institutions get interested. So what market gives us? It comes down, sweeps liquidity, starts some consolidating, also gives us some small SMT over here, as you see, good SMT. Price makes low here on NAS 100. Doesn't make. So this gives us that with SMT, NAS 100 is a leading index to the upside. But no, this is not the deal because this is a 1-minute time frame. It's not ideal. Even though if you don't know how to understand, I will tell you this small thing. This you see over here, these charts over here, these candles. Does this looks like more bullish to you or this one right here? This one or the second one? This one, this one. Definitely we're gonna agree that ES is more bullish, right? SPX, sorry. Then what this market gives us, we never have to like trust like 1 minute noise. 1 minute, never trust the 1 minute noise, guys. That's just advice from me. So what do we see? Price makes bullish SMT. Then what does it gives us? Over here, change of character. Price drops to in this order block. Then rallies, we have a really good reaction for like retails. Yeah, it's amazing, amazing reaction. So retails wait this one. Good reaction. Boom. Green candle. Oh shit. Entry is perfect. SMT. Also it came back to order blocker tested. And as well liquidity sweep. Price already has the fuel to go up. But no, this is not the deal because you just got stepped out. Why? Because of the 1 minute noise. In this option, it's a 1 minute noise. If it was a little bit high time frame, 15 minutes or above 15 minutes, or maybe in some scenarios 5 minutes, it's normal. But here, it's not normal. Look, it's really, really small SMT. So it's definitely a noise, even though when you see this trend over here compared to this trend, definitely yes, looks more bullish. So institutions, they're not interested here. They are definitely not interested here. What they are interested, when they get interested, was this place, this area over here, in both of the indexes. What do we see? Price wicks out over here, these lows, but yes, doesn't sweeps these lows. And that's where institutions get interested. This is a beautiful reaction from institutions over here. And as soon as this candle goes formed, that's it. That's it. We don't need anything more. Also, this order book test as well. Amazing. Nice. Amazing. This is amazing entry over here. And this would be our take profit. That's it, guys. The difference between a beginner and professional trader is not knowing more concepts. It is knowing when not to trade. A setup is not an entry. The market must confirm your idea. In the end of the day, my message and advice for you will be don't chase the market. Understand it. Because the greatest advantage a trader can have is not predicting what happens next, but seeing what others fail to notice. Keep learning, keep improving, and keep building your edge. This is Base View.